Hey guys, Stock Saturday, and it's a rather volatile time at the moment. I'm down 1.3%-ish, about £5,000. So, yeah, not too bad. A little bit better than the market, I believe. S&P is down 2.3% in the last 5 days, and the Nasdaq is down 3.67. So, yeah, a little bit of sort of uncertainty over Trump, and I see he's looks like he's putting in RFK after sort of him stopping being an independent basically and joining Trump's team. He's given him a reasonably big job as health secretary. So I saw Pfizer and Moderna and people like that were down. He seems a little bit wacky, but yeah, let's see what happens. So yeah, I'm slightly down. I have added, you notice, certainly on the pie chart, rather a lot of cash. This has come from the crypto side. If you don't follow that side, it's that time again. So presumably over the next sort of few months, 6 months, a year, this stock side will be getting quite a bit larger. So yeah, made a couple of sales, and I haven't actually. I've got about 7,000 waiting to go somewhere. Not sure whether it'll go into Trading212 or Interactive Brokers, but I'll put it here for now just to show it. That's not included in the returns, of course. Yeah, if I'll include that, it'll be quite a long way up. But yeah, fair bit of selling, and yeah, markets have been sort of not very happy on Friday, it looks like. Sort of semiconductors taking a little bit of a knock, but they're still, way at the highs, really, if you zoom out a little bit. Not a lot sort of else really moving. Process still sort of hanging around, dropping a little. Was it sort of 5,000 or so, 5,080, I think. But yeah, Chinese stimulus sort of not really amounting to too much, more recapitalising the banks, and yeah, not really sort of too much on that would affect the stock side, which is probably for the best, really. They want to rebuild, you know, their sort of economy rather than just juice the stock market. So yeah, but let's have a look at some of the news. So we got Equinox Gold's results, and it wasn't sort of particularly blowing the doors off. They sort of announced that their production was going to be not particularly good sort of a month ago, and that has borne out in the results. No surprise there. 173,983 ounces of gold. Average realized price of 2,461. So yeah, I was saying I thought Q3 would be strong, but yeah, it looks like maybe we need the Q4 results, and even looking at next year to properly get these decent prices in, and Greenstone mine sort of full on production. And yeah, all-in sustaining cost at $1,994. So that's got a combination of a little bit poor performance in their existing mines, and Greenstone not ramping up as much as we thought. So all-in sustaining cost is down from $2,041 in the previous quarter, but drastically up from $1,630 in Q3 last year. So yeah, 1,994 isn't particularly helpful. We hope that should be, a little bit better sort of going forward next year in the existing mines, and then Greenstone, bringing that down dramatically. Greenstone, I think they're saying, is around about 1,050 to 1,150. A little bit higher than what we were sort of hoping, but that is 2024 production. So yeah, we'll see what next year brings. And yeah, revenue obviously up a fair bit from last quarter with the increase in gold price, and that trickles all the way down to EBITDA, not net income just yet. They made sort of a few adjustments, but yeah, this is sort of short-term stuff. Obviously, you can see adjusted net income. We don't want to keep saying adjusted net income. We want actual profit and cash flow, but this is sort of short-term non-cash items. So yeah, 100 million 101 million income from mine operations, up from 26, so that's pretty solid. Debt side hasn't really changed much at all. Cash is almost the same, $300,000 up in cash. And yeah, net debt has increased slightly, sort of, taken on a little bit more convertible debt, they noted, in the last sort of couple of quarters. And yeah, 2024 guidance, they are sort of reiterating the guidance that they gave a month ago. Greenstone production down a little bit, but hopefully 2025 looks solid. Yeah, this year has been sort of fairly thrown off a bit. They did have sort of 190,000 ounces expected this year from Greenstone, sort of starting in June time, but sort of not really ramping up until later in the year. And they're now saying, about 120,000, all-in sustaining costs on the up, but that's only for this year. They're expecting 1,870 at the midpoint now, all-in sustaining cost for this year, where they were at sort of 1,685 at the midpoint. So basically just saying this year is not quite a write-off, but not the best. All-in sustaining cost of like 1,870 with gold. Looks like it's finishing the year around sort of 2,500 to 2,700. Rocking about a little bit, is down sort of the last month, or down since Trump came in, basically. People aren't very happy. And they have noted before, obviously, that part of this debt is convertible debt. So if we're sort of expecting the price to do pretty well off the back of the gold price, then you'd expect this debt to be converted. So yeah, this probably isn't quite so much as it's showing here, but we'll get dilution. So I'm not sort of basing too much valuation on the share price. I'm more sort of looking at what I think the market cap could be, once we get sort of Greenstone mine up and running and sort of everything in full swing, and then dividing that market cap by, I think they said before, about 512 million shares. So that's quite a lot more than is sort of float at the moment. But that's what they've sort of indicated it should be, fully diluted, basically. So I think that's the best way to do it, sort of market cap, potential market cap over fully diluted shares, and sort of get your potential share price based on that, rather than sort of looking at, current share price. So yeah, I still think looking good. My sort of options bets are, January 2026, and now sort of going towards the January 2027 options. So that'll give me sort of all of next year for Greenstone to be doing well, and hopefully sort of gold price is solid, and 2026 people have had a full year of decent prices, and hopefully the price should do well in 2026 as well. Potentially a recession, on the horizon at some point, maybe next year, maybe 2026. So could see a bit of gold upside then as well. So coming over to Kerr Mining, my sort of larger position in the ISA, now smaller position in the options. They always give you this sort of fairly handy but sort of crude looking table where everything's sort of squashed in there, but the numbers are, you can't say the numbers aren't sort of front and center, and they give you 5 quarters worth, which is, very nice, all in reverse chronological order, where a lot of other companies will give you, last quarter and the same quarter last year. They give you the all the in between. So you can't say they're not open and honest. And yeah, we got 94,000 gold ounce, or 95,000 gold ounces, compared to 78 and sort of 80 in Q1. Slightly down on Q4 last year, but seems a really good number. And 3 million ounces of silver. They've sort of been obviously increasing their silver output with their expansion. So yeah, 3 million compared to sort of 2.6 was 3.1 Q4 last year. But so expecting a decent Q4, which we are currently in. So yeah, looking pretty good. They don't give you all-in sustaining cost, unfortunately. They give you this sort of cash cost, basically. So yeah, a little bit annoying. I try and sort of dig through and sort of piece together an all-in sustaining cost, but yeah, they don't really seem to want to give it. But you can get a reasonable idea. So cash cost is down, and on the gold side, 1113, sort of lowest it's been for quite a while. I'm guessing that's on to obviously increased production and similar costs to run the mines plus the new expansion. And yeah, cost for silver at 1567. That sort of was lower in first quarter this year, but yeah, still a decent number. Silver sort of pulling back a little bit now to just under $30. Did sort of was pushing 32, 33, but I think we've got a decent move sort of over the next couple of years. This is just a temporary pullback. And so this increased production and sort of drop in capital expenditures at long last is flowing through to the headlines. 313 million in consolidated revenue, up substantially, up from Q4 last year, even when we had more production. So that's good. Net income of $48 million, up from 1.4 last quarter, which we sort of celebrated after many quarters of outflows, obviously, or net loss, but I would see as basically cash outflows, expanding. So yeah, 48 million for a quarter is a good start. Not a lot of adjustments. The adjusted net income was actually to just take it slightly lower. And yeah, per share 12 cents. I think we need to see a little bit more quarters going forward to see where they're really going to be. Shares outstanding sort of coming up slightly, 400 million shares now, and this is going to go up dramatically with their acquisition of, was it Silvercrest? So yes, interesting. 121 million of EBITDA as well, slightly higher on adjusted, but yeah, more than double the previous EBITDA, and sort of 27 million, 25 million, 15 million this quarter last year. So yeah, they're not one for sort of throwing out the it's 700% or whatever it is, 800% higher than last year. They just say that's what it is. So yeah, I appreciate that. And yes, the Silvercrest acquisition transaction, October the 4th, they've entered into an agreement to purchase Silvercrest, which is, I think, a little bit overvalued possibly. It's going to add, I think they said 13 million ounces to the silver, which is sort of not that much really, and it's like 90,000 ounces of gold for sort of $1.7 billion worth of dilution basically to the stock. It sort of obviously took a fair whack on the news, and yeah, people weren't all that happy. But Coeur does seem to be a bit of a sort of beta to silver, more so than gold. It does really well when silver goes up. So this is increasing their sort of silver percentage of mine a reasonable amount. And yeah, if they get even more beta to silver, then I'll probably be pretty happy because I think silver's going to do well. So yeah, interesting. And they left guidance the same, so 310,000 to 355 on gold. I think they would sort of pin that down a little bit more now, but yeah, we still got that fairly wide range. 10.7 million to 13.3 of silver. So yeah, not looking too bad. They give sort of cash cost projections, which are pretty much unchanged, and sort of sustaining capex now 135 million, 140 million, and development capex now right the way down to sort of 40 million. So good, and a little bit of exploration capex and G&A, of course, but they're sort of showing this is starting to be profitable quarter on quarter. So looking good. Obviously, the production guidance for sort of next year is going to increase a hell of a lot with the acquisition. I think they're looking at sort of, as I say, about 430,000 ounces of gold and about 23 million ounces of silver. So yeah, a hell of a lot more silver. And as I say, that hopefully should give that sort of beta to the silver price. And yeah, just looking at balance sheet wise, obviously this increase in price of the metals has meant a little bit more cash, 76 million in cash and cash equivalents, a little bit more sort of current assets on across the board really, and yeah, current liabilities, 27 million of debt and 577 million of long-term debt. So cash is up a little, debt is up a little bit more, but would expect them to hopefully start deleveraging as the profit rolls in. Noting the sort of Silvercrest acquisition, they did say would be good for the balance sheet. Silvercrest have a lower sort of debt to equity ratio than Coeur Mining. So yeah, balance sheets should improve from what is not the best, but not the worst level. Should look a little bit better. Having a quick look at Hive as well. We sort of looked at CleanSpark and Riot, and Hive's quarterly results are out. Obviously, similar to the others, they're a little bit out of date now. They start with their balance sheet. Cash is very, very low, but they don't sort of seem to run with a whole lot of cash. They don't have a huge amount of debt, so don't really need that much cash. Fairly sort of predictable business unless something drastic happens to Bitcoin. But yeah, as you say, sort of this can get out of date very, very quickly. 165 million of digital currencies on the balance sheet. They have about 2,600 Bitcoin, which I believe is now worth about 235 million. So since the Trump win, so rather nice. They're at about 570 million market cap. So 234 in Bitcoin on the balance sheet is pretty good. And then obviously income on top of that. I do still think they're worth a reasonable amount. Yeah, debt, sort of long-term loans payable, about 11 million. Lease liabilities on facilities and that sort of thing. Term loans, sort of various different bits of loans. Looks like sort of about 20 million or so. So 7 million on the balance sheet in cash, and yeah, not the worst interest rates. So it's sustainable, but obviously we want Bitcoin to do much better than it has been. Sort of certainly in 3 months leading to September the 30th, they've got cost of sales higher than revenue before you take anything at all into account. So as I've sort of been saying the last few weeks, do think this isn't the best business model really anymore. The sort of sole Bitcoin mining. Obviously, Hive have their AI side, which they're sort of growing, but it's still fairly small. So I always think the sort of net income, that they show is generally kind of a nonsense because they have their sort of unrealized gains and all that sort of thing. But yeah, most of these numbers sort of look fairly awful. Guessing Q4 will start to look a little bit better. They're basically showing a loss, which is then propped up by unrealized gains and sort of gains on sale of equipment, and yeah, a net loss of 7.3 million. Was 23 million loss this quarter last year. On the 6 monthly, it's 3 million loss. So again, not the worst thing, but this is all adjusted by unrealized gains. So yeah, not the best. It needs much higher Bitcoin prices to really start posting a solid net profit. But yeah, the price sort of just seems to largely be beta to Bitcoin. You have days where Bitcoin is sort of slightly up or flat, and the miners this week dropped sort of 10%, even more, 15%, some of them. And obviously everyone sort of says, why are they down when Bitcoin is not down? That's just the way they are. You had probably a little bit short-term memories, like a couple of days after Trump got elected, you had, 3-4% gain in Bitcoin, and the miners are up like 15%, 20% in a day. So yeah, they're volatile. Share count is annoyingly sort of increasing. I'll sort of consider them as just over 100 million shares on my model, and yeah, they're now up to sort of 118 million. That's probably going up a bit more, and it will be going up more to fund the Paraguay expansion, which again is not coming online until around September next year, which I still think is possibly the end of the bull market. So not ideal, but I'm hoping Hive should just be sort of coming into their valuation a little bit more, and yeah, people sort of noticing them. I think because being Canadian doesn't help, and they haven't sort of had the accounting rules to be able to readjust their Bitcoin as Hive and as Riot and CleanSpark and people like them do. But yeah, not ideal. So yeah, there isn't really that much to cover here. They did show in their presentation, I don't think they've showed it here, that the AI revenue is up to an annualized $9 million. So about 9 million, about sort of 2.3 million, I think, in the last quarter. And they sort of, project that forward 4 quarters and say 9 million. They're sort of hoping to get to, I believe, 100 million annualized by the end of next year. So a long way to go, and it's not really rising quite as much as I'd hoped, but yeah, that does sort of feed partly into my model, and partly why I'm sort of holding these a reasonable position in these over Riot and CleanSpark, certainly in the Interactive Brokers account on the options. So hoping for a sort of bit of a breakout move on that AI revenue doing well, but we'll have to see. So economic news wasn't sort of a huge amount this week. Sort of UK earnings looking slightly better than expected, but unemployment rate went up to 4.3% from 4%. So that's quite a large increase. Wednesday you had US inflation numbers, basically all on track, albeit sort of they are up. Core CPI flat, and headline CPI up 0.2%. So yeah, potentially sort of, obviously this isn't Trump led, this is October, but maybe sort of people anticipating Trump, and now you're likely going to get quite a bit more inflation with tariffs and all sorts of things. But yeah, at least they're not looking at the moment like a recession. Sort of initial jobless claims back at sort of 217,000, lowest they've been for quite a while, and continuing sort of still at a fine level. UK potentially is looking a little recession-like. Monthly September GDP negative, and yeah, quarterly for Q3 0.1%, not exactly blowing the doors off. Yeah, you had sort of some US retail sales and bits and pieces, but nothing too much. That was basically all the news. So portfolio-wise, looking fairly good. I thought CleanSpark and Riot sort of had a bit of a drop, but are doing pretty well since the Trump election, basically. Gold and silver sort of dropping back a bit. Coeur Mining and Equinox, I think, are down over 10% sort of since then, but yeah, nothing too drastic. Didn't sell my REITs or anything. Sort of starting to look at the REITs, really, getting sort of a fair amount of cash into the portfolio, and sort of looking at what is maybe a little bit defensive and sort of attractive from that side. So yeah, I'm not sort of super keen to be selling the REITs at the moment. and a little bit of cash. I moved the cash down here because the pie chart wasn't working. So yeah, there you go. Looking at Interactive Brokers, sort of taking a little bit of a knock. Copper down quite a bit. So KGHM has taken a bit of a hit. That was sort of 35%, 40% green not so long ago. Pan American down to 21.41. Again, it's nothing too much. We're expecting a fair bit more from that. And yeah, on the option side, it's I think within a couple £100 of last week, despite sort of rather large moves. Equinox gone from, or my sort of options position in Equinox gone from about 1% in the green to 23% in the red in a week. So yeah, you've got to sort of take the volatility with this if you want to invest in them. That may sort of put you off, and if you're sort of a bit risk averse, it's probably best to put you off. I do have, worth mentioning, some January 2025 Equinox options for them to sort of get to $10, which is looking essentially impossible now. So in the account, at least, they have gone to almost zero. So probably rightly so. Have to write them off and go with January 26 and 2027. So yeah, you do have options, despite the stock being quite a bit up since I bought them. Those options have gone to zero. So that's the way you have to take them. But yeah, Hive and Riot at the moment sort of making up for those losses, and it sort of put me pretty much where I was. The only thing I've been buying is the January 2027 Equinox options. They're at $12.50. That was sort of the highest they do, basically. I might not have gone that much higher if they did offer that much more, but yeah, they look pretty good. So yeah, and a little bit of cash. So yeah, about 4,390. I sort of spent about 1,500 quid in the last week. I was hoping to spend a bit more, but we'll see what price action gives us. So yeah, leave your thoughts in the comments below if you guys are excited by more Trump action, and like and subscribe. See you soon.